Tonight I want to speak directly to our Dinar for Veterans community about one number that is cutting through all the noise and bringing serious attention back to Iraq's financial system. That number is 85%. Not 8%, not 50%. 85% of dollar demand in Iraq's market is reportedly being driven by traders and commercial businesses, not by ordinary citizens buying groceries or paying household bills. For those of you who have been holding Dinar for years, especially our veterans who understand patience, structure, and mission readiness, this number matters more than any rumor, any so-called window, or any whispered date ever could. Because when you understand where the pressure is really coming from, the entire conversation changes. If 85% of dollar demand is coming from traders, that tells us something critical. The strain on the exchange rate is not primarily about everyday Iraqi families rushing to buy dollars. It is about commercial activity. It is about importers, wholesalers, contractors, and large-scale business transactions moving significant sums through the system. That means the pressure point is concentrated. And when pressure is concentrated, it can be identified, targeted, and managed. This shifts the dinar discussion away from emotional speculation and towards structural reform. Real currencies do not strengthen because of online excitement. They strengthen when financial systems become more balanced, more transparent, and more disciplined. They strengthen when distortions are reduced and when the largest sources of instability are brought under control. For dinar holders in the United States, especially those who served and understand how operations work behind the scenes, this should sound familiar. You do not fix a complex system by hoping for a miracle. You identify the main stress point, you stabilize it, and you build from there. Right now, the 85% figure is acting like a spotlight. It is showing Iraqi policymakers and international observers exactly where the strain is heaviest. If traders are driving most of the dollar demand, then reforms in trade settlement, customs enforcement, digital payment systems, and banking compliance have the potential to make an outsized impact. This is not theory. This is how financial systems operate. When the biggest valve in the system is adjusted, overall pressure can decrease significantly. Many people in the dinar community spend their time asking, is the window open? Or, is this the week? But those questions miss the deeper issue. The real question is whether the foundation is getting stronger. Are Iraqi banks improving compliance? Are digital payment systems expanding? Is the government tightening oversight on how trade transactions are processed? Is the leakage in the dollar market being reduced? Those are the indicators that matter. Not hype, not coded messages, not secret meetings. When people talk about a financial window, they often imagine a hidden switch that gets flipped overnight. In reality, what looks sudden is usually the result of months or years of preparation. Banking reforms, documentation standards, reserve management, anti-money laundering controls, customs tracking, and trade settlement mechanisms are not glamorous topics, but they are the machinery behind currency strength. If 85% of demand is coming from traders, then improving how those traders access, settle, and document their dollar needs becomes central to stabilizing the market. And stabilization is the first step toward any credible long-term currency strengthening. This also tells us something encouraging. The pressure is not random. It is not scattered evenly across millions of small transactions. It is concentrated in commercial channels. That makes the challenge more defined. And defined problems are easier to solve than vague ones. For our veterans watching, you understand the value of clarity. When leadership identifies the primary threat or vulnerability, strategy becomes sharper. The same principle applies here. The 85% figure is not a magic ticket. It is not a promise of immediate revaluation, but it is a map. It shows where attention must be focused. There is another critical layer to this discussion: trust. A currency gains strength when confidence in the system improves. Confidence grows when rules are enforced consistently, when settlement processes are clean, when corruption channels are narrowed, and when transparency increases. If the Iraqi government and central bank can demonstrate that they are effectively managing the largest source of dollar demand, that sends a powerful signal to markets. Markets respond to credibility. Traders behave differently when they believe the system is tightening. Banks adjust their positions when they see stronger oversight. International partners gain confidence when compliance improves. Over time, those behavioral shifts can support exchange rate stability far more effectively than speculation ever could. Now, let's be clear and responsible. Structural improvement does not equal instant revaluation. A healthier system creates the conditions for progress, but it does not guarantee a specific rate on a specific day. Anyone who tells you otherwise is selling emotion, not analysis. What structural improvement does mean is that the environment becomes more supportive of future change. It means that if broader monetary policy adjustments ever occur, they would be backed by a stronger, more resilient financial framework. That distinction matters. Right now, the conversation coming out of Iraq appears to be increasingly focused on trade regulation, digital transformation, banking modernization, and better alignment between official and market rates. Those are not flashy headlines, but they are the kind of reforms that reduce distortions over time. When a country reduces reliance on cash, strengthens electronic settlement systems, improves customs tracking, and tightens documentation around imports, it gains more control over currency flows. Greater control means fewer surprises. Fewer surprises mean greater stability. And stability is the bedrock of any serious currency reform. For US dinar holders, especially those who invested years ago and have endured waves of rumors and disappointments, this shift towards structural discussion is significant. It brings the conversation back to measurable realities. It encourages discipline instead of fantasy. The 85% number also challenges a common assumption. Many have believed that currency weakness was primarily driven by everyday consumer demand for dollars. But if the bulk of demand is commercial, then reform does not have to chase millions of small actors. It can focus on regulating and modernizing large-scale trade flows. That is a far more strategic target. And when strategic targets are addressed effectively, markets notice. This is why the current development deserves attention. Not because it guarantees a life-changing event tomorrow, but because it reflects a maturing discussion inside Iraq's financial leadership. Acknowledging where the imbalance exists is the first step toward correcting it. Financial systems reward order. When order improves, participation improves. When participation improves, confidence grows. And when confidence grows, policymakers have more room to operate. For our Dinar for Veterans family, the message is this: stay focused on structure, not speculation. Watch for continued reform in trade settlement. Watch for stronger banking compliance. Watch for digital payment expansion and tighter oversight of import financing. Those are the signals that the base is strengthening. The direction right now appears to be toward more control, more transparency, and more alignment within Iraq's financial system. That does not mean the journey is complete. It does mean the conversation is becoming more grounded. The 85% figure is not the end of the story. It is a lens. It shows us where the real pressure sits, and when pressure points are visible, they can be addressed. As veterans, you know that sustainable success is built on preparation, not excitement. The same principle applies here. If the financial engine is being repaired and recalibrated, it may not look dramatic today, but preparation determines performance tomorrow. So, as we continue to monitor Iraq, let's measure progress the right way. Is the pressure being reduced? Is the system becoming cleaner? Are banks more prepared? Is trade being managed with tighter controls? Those are the questions that matter. Because in the end, currencies move through systems, not slogans. They move when foundations strengthen. They move when trust is rebuilt. And they move when the largest sources of instability are brought under control. That is why the 85% number matters. It brings clarity, it brings focus, and it reminds us that real progress is structural. Stay steady, stay informed, and as always, we will continue to follow the facts and keep you updated right here on Dinar for Veterans.